Okay, so let's start. Father, once again, in the name of the Lord Jesus, I just want to say thank you for the opportunity to share with your people, your children, the knowledge you have given, you've granted. Thank you for understanding. Thank you for revelation. I pray that you will help them to be able to take advantage of this information that will be used to better their lives and their trading. In the name of our Lord Jesus, thank you, because at the end of it all, they will have testimonies of transformation in Jesus' precious name. Amen. Now, I have done, this is a third class I'm doing, and in my first class, I spoke about the level trading. And the second class, I also spoke about level trading. But this time around, I want to talk about structural trading, which also will be applied even in level trading. So I'm just giving you something that can help you. Now, what do I mean by structural trading, and how is it going to help you in applying it with level trading? In level trading, I give you about, I think, much more than 6 strategies you can apply in level trading. And I said to you that the very first thing you need to do when you are going to trade is to first and foremost check for your trend. Check for your trend. Okay, you check for your trend. You have to know where the trend is. Is there an uptrend or a downtrend? And now, when you talk about trend, there is a major trend and there is a minor trend. You can trade in the direction of the two. You can trade in the direction of the uptrend and major trend, and at the same time, you can trade in the direction of the minor trend. Now, but when you are trading in a minor trend, you have to also consider the fact that you are in a minor trend, meaning the trend can change with any opportunity that the market has before you know it. So you must have that in your mind. So the trend must be known. Then the moment you know the trend, the next thing you need to look for is your levels. Your levels, because we talk about level trading. So for instance, you see this market now that I showed before you. Let's zoom it and see. Now, so what I'm seeing here is that from here to here, I'm seeing a major downtrend. Okay, but at this point, I'm seeing an uptrend. So now in the major downtrend here, I mark my level here. I mark my level here. That's then also, I can also see a minor uptrend. So I mark a level here. So I either looking for how to trade towards the direction or how to trade towards this direction. Now, in structural trading, is very, very important, because a lot of times when you are looking for a trade to take, despite of your signals and your strategies, many times if you don't pay attention to what I call structure, you might have a good signal, maybe based on the candlestick descriptions and candlestick formation. And unfortunately, if the structure is not considered, you might end up having to lose the trade. And you'll be wondering, I thought this is the strategy. I thought this is what I'm supposed to do. Now, so let me use that to explain to you what structure means. Now, in a situation where you have a major downtrend, like I said to you from the beginning, you can choose to trade in the direction of a major trend or minor trend. But when you are trading minor trend, consider you are trading against the major trend. Now, if I want to trade this, I want to take this trade now. This trade already has shown me a minor trend. As a matter of fact, the structure clearly shows me that is a minor trend. Now, let me explain the structure to you, which I think many of you understand. But sometimes, because you are trading binary, and binary option is a very fast trading instrument. So sometimes you might not, have time to do your proper detailed analysis. And I advise you, it is better to trade with proper detailed analysis before you pull the trigger. Now, in this trade right now, I already see major trend is a downtrend. So if I want to apply any of my strategy, I will also need to know what is the structure saying. Now, the structure is, this is the lowest point of this market. The market was coming down and making a swing low, a swing high. He made another swing low here. Then he made a swing high here. Then he made another swing low, lower than this place. So as far as I'm concerned, downtrend is still there. But unfortunately, something happened. From this level, the market moved and broke this level. So the moment this level is broken, it is a sign for me that the market is beginning to shift from a downtrend to upper trend. The major trend is a downtrend, but it's trying to create a minor trend by breaking the previous level here. I know many of you have this idea in your head, but the question is, most traders don't carefully use it when they are trading. They are too in a hurry. That is why, let me quickly chip in this thing. I always prefer to trade with 5-minute candle, because the 5-minute candle gives you the opportunity to have at least a minimum of 5 minutes to analyze the market. That is my own advice. Okay, I know many of you are professionals, so you can do 1 minute. You know, I have traded 1 minute before successfully, and at the same time traded 1 minute with a lot of failures, because sometimes the market I'm looking at, before I know it, I'm not able to see a particular level. Because I didn't see it. The market was moving very fast, so I was following the 1 minute. So I take a trade and I realize that, oh, there's a level here. I didn't see the level. And so when such things happen to me, it demoralizes me, okay? So in that case, I shifted from 1 minute, I moved into 2 minutes. So from 2 minutes, I realized that there are still some it's just a little bit different from 1 minute. So sometimes I enter the market and the market will close, and because of late entry. So I decided to move in straight into 5 minutes. So 5 minutes gives me opportunity to calm down, pause, and be able to analyze. Now, so that's why you are seeing here right now, you are seeing 5 minutes expiry, and here I change it to 5 minutes expiry from time to time. So if it is pocket option has a way of automating it. You don't need to be changing it and changing it all the time. So let's get back to what we're talking about. So now that I notice this level, previous swing high was broken. So it's a sign for me that the market wants to go. That doesn't mean I'm going to take a trade. So I will wait for confirmation. Now the confirmation is that I'll wait for another swing low. So this is another swing low. So, but this swing low did not reach the previous swing low here. So since it couldn't reach here, it is now a confirmation for me that the market is going up. So at this point now, I can be looking for opportunity to buy. If I want to trade minor trend, I'll be looking for opportunity to buy. Now, and you can see the market, it went up like this. The idea is, in a normal trending market, this market is supposed to go like this, break this level, make a higher high or swing high. But unfortunately, it didn't get to that level. So that gives me an idea that this is a ranging market, because it couldn't break the previous high. So it's a ranging market. So it came down again, but it couldn't break here. So this is a flat. So it went up again, then it came down and broke the whole of this place. So the whole of this trading setup here is wrong for me. Why? Because I see swing lows and swing highs being broken, and so the market is not trending. So when you talk about trending market, this is exactly what it means. Many people think trending market is when market is going in a linear direction. You know, that is what they think a trending market is. No, there are two types of trending markets. It could be linear trending market, and the second one, it could be structural trending market. In a structural trending market, you see market going like this. Okay, it's going like this. It's going like this. The swing lows are broken, swing lows are broken, swing lows are broken. You see, it's broken, it's broken. So this is still a trending market. In this market, that is where you can apply sometimes what you call your trend lines. Okay. Sometimes I see people drawing trend lines in where they don't need to draw trend lines. But you know, sometimes I think the challenge with many traders is that they want to tell the market what to do. They have a concept in their head. They think that, okay, this is my strategy, so therefore I have to make sure that the market follow this. No, you don't tell the market where to go. You look at where the market is going and follow. If the market is not giving you a proper trend, you don't need to create trend for yourself. You don't need to create trend. And that is why so many people now draw trend in such a way that at the end of the day, the trends are not even respected, are broken. You see, when the market is trending, you know it's trending. If it's not trending, you know it's not trending. You can't force it. So there's a linear trend and there is a structural trend. That is why I'm saying to you that my strategies are applicable in Forex trading. The moment you understand it, you can apply it in Forex trading because I trade Forex. Okay, so that is a trending market. So now what I'm trying to explain to you here, what I call structural trading, is that there are two major concepts in structural trading. The concept is you either trade when the market is strong or when the market is weak. You trade when you have realized the market is strong or when you have realized the market is weak. Now I'm going to explain to you. First and foremost, like I said, the major trend is a downtrend here. The minor trend is an uptrend here. So it broke this level now. It made a swing high here. So what I'm going to be looking for now, okay, this is a swing low here. The market went up here. So it's coming down here. Now, if this market comes to this area now and went back up and not able to break this level, the moment it's coming down here, I can take a trade because I know the major trend is a downtrend. And so I am going to be on the advantage of the major trend. So I will be looking for opportunity when the market is strong, then I will ride with the market. So that is why sometimes when I take a strategy like this, I ended up trading and the candles are big in my favor. Okay. So, but the first thing is that you must understand the direction, which is the structure. Where is the market going? So in this market now, what I'm looking for now is the structural break. It's coming like this. Now you can see a very strong seller's candle, but I'm not going to go with this seller's candle. Why? Because the market is trying to, a structure has not been broken. I would prefer this market to come like this, go up. When he gets up and he did not break this level, sorry for the noise, guy. I have muted the person. So what I'm saying is that this market is coming down strong here now. Now, it would be a mistake for me to say, oh, this market is strong. This candle is strong. Let me sell. No, I will not sell because the structure has not been confirmed. Chances are that the way this market is, buyers will still enter and go up a little bit. So I will wait for the market to go up here. When the market now starts, if it gets up here and it couldn't break this level, then I know that buyers are now weak. Yes, buyers are weak. Now I'll be looking for opportunity where the sellers will be strong. And the strength of the sellers in this market will be determined back again based on candle. The type of candle will tell me that the sellers are strong. Now, this candle you are seeing here now is a strong candle. But I'm not going to go with this. I'm not going to go with this because I need market might still go like this. By the time it has gone like this and create another swing, so it has shown me a structure in the market that now buyers still enter the market, but they entered the market, they couldn't break this level, this structure. Maybe they got to this level and came down. The moment they are coming down here, I'll be watching for a strong seller's candle here. The moment I see a strong sellers enter the market, then I can go with the market. That is what I describe as a structural trading. And the issue is with a lot of traders, like you see this candle now is a very strong one. So sometimes they can decide to enter the market here and sell this candle. And they win. But they can also sell this candle and lose because there are other factors. And when you don't have all the detailed factors, they will win some. And after they apply the strategy in another area where some of those factors are not considered, they lose it. And so when they lose it, they wonder, oh, this strategy is not working. It worked today, tomorrow is not working. So they come up with, there are some strategies that are not working, or it works on market. In some markets, it doesn't work. The answer is no. The moment you understand candlestick is candlestick anytime, any day, anywhere, any market. And that is why I have used my life to focus on studying candlestick. Why do they behave the way they behave? Why do they act? Why do they do what they do? Why do they move when they move or how they move? Candlestick psychology. So this is what I call structural trading. The moment you understand that, hey, look at the market now. This is a very strong seller. Very strong seller. But there are reasons why I will not enter this market. Number one reason why I will not enter this market is that, number one, this candle is too strong. It's too strong. Too big. Too big. And too big can mean two things. Number one, it could mean that the market is going to reverse when the candle is too big. Number two, it could also mean that there's too much of force in the market. And that is what the too big candle means. The too much or too big candle, I call it exhaustion sometimes. When you see the candle forms and it's very big, it could mean that it has finished its energy, so it's going to reverse. So a lot of times, too big candles will reverse the market. Now, so you see this candle is too big, so I will not go. Even if it's in the direction of my trend, I will still not go because they are not trusted candles. They can go and they can go against. So in a situation where you have 50-50, you avoid it. Okay, so I will not go with this. Number one. Number two reason why I will not go with that. Okay, really, if we look at it, we have a signal here. Now, let me explain what I mean by signal here. If you look at the structure, he came here, made a new low, then he went up. So when he got up here, you see that he came down. Actually, in 1 minute, you will see that he came down here. Then he went up. He couldn't break this level. Then it came down. So from here, you already know that sellers have entered. Now, let me show you that in 1 minute so that you can see the structure. Correct. So this is what we're looking at. Look at it. Uptrend. Then made another structure. He came down here. Then he came down. It's the moment he came here and he couldn't break this level. They already told me that the market is coming down. Since he couldn't break this level. So it's coming down. So now I'll be looking for opportunity to enter the market. Since this level, let me now use this to explain it. Now, since this level now got here and it couldn't break this level. So at what is going to be my signal? Remember, I told you I'll be taking a trade when the market is either strong or weak. Now, here now, I already have one confirmation. The market wants to go down. The major trend is a downtrend. So it has reached this level. It couldn't break it, meaning that the strength of buyers now weak. Now, where will I take a trade? Because I want to sell. I want to sell. And my signal is when the market is strong, I want to go with sellers. So how will I know that the market is now strong? Very simple. Now let's look at it together. Now you see market came up here, went up here, and stop at this level. So I'm looking for where sellers will enter and be strong. Now I can see sellers here, rejection. I still see sellers in this candle, rejection. But where do you see proper sellers enter? This candle. So after this candle, I take a sell. This is my signal. I take this trade. Remember I told you, I take a trade when the market is strong. And I take a trade when the direction is in line with the structure. So I already saw here, I already know that buyers that came from down here, they are weak because they make it a swing low. They wanted to make a swing high. They couldn't make a swing high. So buyers are weak. So I'll be looking for sellers. So sellers enter here very strongly. So I'll go with the next candle here. So this is my signal. This is my signal. This is my trade. Why? Because I want to go in the direction of the trend. I want to follow the structure. So this is very, very applicable. And now, if I'm trading Forex, I'm going to look at it and enter the market here and put my stop loss here. So that means the market is going like this. You can imagine how many pips I've made. And the only reason why I'm doing that is because I understand structure. I understand structure. So I enter the market here. Sometimes there's also another side of it. You know, I turn back to 1 minute. I can as well enter the market here for 1 minute and put in an expiry for either 3 minutes or 5 minutes because I know the market is now coming down. Do my analysis in 1 minute, enter the market here, and with 3 or 5 minutes candle. 1, 2, 3, 4, 5. You know, but I don't like all of those ones. I prefer to just take candlestick according to their expiry, according to their timing. So if I know this candle, like for instance now, look at this candle, I'm very sure for the candle here to be strong, the next candle will be a red candle. Will be a red candle. But if I say, okay, I'm going to enter 3 minutes, 5 minutes, that is a strategy for Forex because I'm going to put a stop loss above here. So if I enter 3 minutes now, enter the market here. 1, this is 1, 2, 3. I might win the market here. But if I enter 4 minutes, the 4 minutes is here, I might lose the market. So there is a way to scale the strategy with Forex. So this is what I do. This is what I'm trying to pass across to you guys so that when you are trading, maybe you have your own strategy and maybe you have never paid attention to structure. Maybe you've never even looked at it. Maybe you have understood, you've heard about structure, but you've not taken time to look at it very well the way I'm explaining. Maybe this video will help you out. Maybe this video will help you out. So this is what I call structural trading. It's a strategy where I think somebody can just focus on a loan and you are okay. You are just going to be looking for structure. And the moment the structure is broken and you know that, oh, the market cannot go up again. If it's a downtrend, then you are looking for, the next thing you are looking for is a strong candle. Now, this my signal candle here. If this candle has a rejection like this, I will not go because that will tell me that buyers are still inside. So I will not go. I will wait until I see a strong candle. And the moment I see buyers enter like this, I will wait because that means the next candle might be up, might be green candle. Until I've seen a very strong candle that is a seller candle in the direction of the trend and the structure, I'm not going to go. Now, one other thing I want to say quickly before I finish is that despite the fact that this is my signal candle, if there is a level here, I will also not go. I will also not go because buyers are still very strong here. They might still look for opportunity to go. So if my signal ends or closes at a level, I will not go. But because this one did not close at a level, so I went in, and this is a good one. So this is what I mean by structural trading. I hope I've been able to use this short video to explain something very, very, I hope you have learned something. I hope you have learned something. That's what I'm just trying to say. I hope you have learned something. If you have any questions, can you just quickly ask me a question before we end the class? I have a lot to do. Now look at this one now. Also here, you see, you can trade structure here. You know that this is the one we traded. So the market went down again and it went up again, okay? So when it went up, of course, you couldn't break this level. So I'm going to look for opportunity here again. Where is my opportunity? I will show you. The market got to this level. So it created a very strong candle here, but with a rejection, I will not go. So I'm seeing a seller here, weak. I'm seeing another seller, weak. So when I see this strong candle here, that is when sellers have entered. Then I can go with this one. Can you see what I'm trying to say here now? So this is structural trading. And that is what I say, that you trade structural trading when the market is strong. Now, the other one, when the market is weak, is when you want to trade reversal. But as long as you want to face structure, you want to follow the trend, you want to follow the structure, you are looking for the candle that confirms that now sellers have entered. All those candles where you are talking about weeks and all of that, the moment you have those candles, my advice for you is avoid such charts and go to another chart. Look for a chart. Nobody is, you are the one that is in control. You are the one that owns your money. It's your money. So don't be emotionally pushed. Market has a way of pushing us emotionally because it's moving and it's moving, and sometimes you say, oh, I wanted to enter this one. If I enter it, I would have won. And after you didn't do that, you now enter one, then you lost. Now, that is an emotional trading. That is a trading that is based on the movement of the market. You have to take a trade based on your concept, your strategy. If you don't see things that confirms your strategy, it doesn't matter how the market is moving. Don't be moved by the market. You control yourself. Okay, so I'll just give you, if you have maybe one or two questions before we finish the class. Let me take one of. If you have any question, if you don't have a question, this is what I have for you. I'm still working on, by February, I told you I'm working on 100 to 100. 100 to 100. Yesterday I was looking at it that I'm going to even do 100 to 100 in 10 days. I will do that, but I don't want to do that now because that is going to create an issue. Now, what will I do to do 100 to 100 in 10 days? And I also have one plan, 100 to 100 in 5 days. I have 100 to 100 in 5 days, 100 to 100 in 10 days, and 100 to 100 in 30 days. Now, let me tell you, it's not the time. It requires a lot of work. Now, if I'm going to do 100 to 100 in 10 days, it means I will take more than one section per day. That's what it means. The same strategy, the same winning ratio, but I will have to work more. I might have to take one section in the morning, probably take one section in the afternoon, and one section in the night to be able to achieve it in 10 days. So what will have taken me 30 days, I will do it in 10 days. Of course, you have to just do the math. 30 divided by 3, 10 days. So that means I'll take 3 sections in a day. So with that, I can achieve it. But I really don't want to do that. Because when you begin to do that, you are putting yourself under emotional stress. So, but if you take one section in a day and you just finish one section, you can go ahead and do whatever you want to do. So that is the 100 to 100 in 30 days. So I'm working on that starting from February. I have some people trying to say, oh, they are begging for how they can be part of it, but without paying so much. Yes, I'm considering that, just 5 people, so that I can put their testimonial in the website. Some people have contacted me. I told them the price, but they are asking for something that I'm looking for. Since it's going to be a group of 5 people, I'll just see what I can do to see 5 people, maybe, can just, when they contact me, I'll know what to do. Okay. So thank you very much. Since there is no question, I am going to stop here right now and do the video and find a way to see how to post it to you guys. Father, I want to say thank you for the opportunity once again to share. I pray that there will be an understanding in the mind of your your children, and they'll be able to use it to transform their lives and transform their finances in the name of the Lord Jesus. Thank you, precious Father, in Jesus' precious name. Amen. Thank you, guys. Thanks for joining this. I appreciate that, and God bless you.